Back to my san el Iraqi Dinar, Nedu Supiadai. Here's the currency reset is underway. Iraqi Dinar RV and Vietnamese Dong, a VND exchange rate introduction in the global financial landscape. Currency valuation plays a vital role in economic strength. International trade and geopolitical influence. Among the most discussed and controversial topics in this domain is the idea of a global currency reset GCR, with a particular focus on the Iraqi Dinar IQD and the Vietnamese Dong VND. Supporters of the revaluations RV theory believe that both currencies are severely undervalued and are poised for a significant upward revaluation, which they argue will align these currencies with the economic realities of their respective countries. This article dives deep into the fundamentals of a currency reset, the background and current status of the IQD and VND, and what a potential revaluation could look like in the near future. What is a currency reset or revaluations RV? A currency reset refers to a global restructuring of currency values and financial systems. In essence, it's a recalibration of the value of world currencies against one another, usually after economic instability, inflation, war, or major geopolitical change. An RV's revaluation is different from a devaluation. While a devaluation lowers the value of a currency intentionally by a country's central bank, a revaluation increases the official exchange rate of a currency, making it stronger in the foreign exchange market. RV is typically rare and only occurs when a country's central bank or monetary authority adjusts its currency to reflect better economic fundamentals, improved political stability, increased foreign reserves, or a shift in fiscal policy. Part I. The Iraqi Dinar IQD RV journey. Historical context of the Iraqi Dinar. Before the US-led invasion of Iraq in 2003, Dinar was trading at nearly 32 USD per 1 IQD, making it one of the strongest currencies in the region. However, sanctions, war, and the collapse of the financial system decimated its value. After the fall of Saddam Hussein, the Central Bank of Iraq CBI introduced a new dinar, plummeted, stabilizing in recent years at around 1 USD per 1, 451, 500 IQD on the open market. Why people expect an RV of the dinar 1. Oil reserves and wealth potential. Iraq holds the 5th largest proven oil reserves in the world, and oil accounts for over 90% of government revenue. Once Iraq achieves political and economic stability, it's believed the dinar should reflect this vast resource wealth. 2. Economic reforms and the White Paper. White Paper reforms introduced in 2020 aim to diversify the economy, strengthen non-oil sectors, and modernize public administration and banking. These reforms signal to investors that Iraq is committed to long-term stability and could eventually support a stronger currency. 3. IMF and World Bank engagement. Iraq is cooperating with the International Monetary Fund, IMF, and the World Bank, focusing on rebuilding infrastructure, creating jobs, and managing inflation. Many believe IMF reforms could lead to currency stabilization and later to revaluation. 4. Currency supply control. CBI has taken steps to limit the money supply and strengthen its foreign currency reserves. A smaller money supply with stronger reserve supports arguments for RV. 5. Digital dinar and card systems. The CBI is modernizing Iraq's financial infrastructure, including digital payment systems, ATM networks, and potentially introducing a central bank digital currency CBDC. These technological steps align with broader global central bank trends and increase trust in Iraq's monetary system. Current exchange rate and speculation as of mid-2025. for the IQD hovers around official CBI rate 1 USD 1320 IQD street parallel rate for 51,500 depending on region. Speculators argue that a reset could push the dinar much higher, possibly even back to 1 QD USD or ZOP depending on Iraq's oil output, reforms, and IMF approval. Part I. Vietnamese Dong VND. The silent underdog background of the Vietnamese Dong. The Vietnamese Dong of VND is among the lowest valued currencies in the world currently. The exchange rate is approximately on USD 23,524 lot on VND depending on market fluctuations. Vietnam, however, is considered one of Southeast Asia's fastest growing economies. Over the last 2 decades, Vietnam has become a manufacturing powerhouse, particularly in textiles, electronics, and agriculture. Reasons behind the low VND value. 1. Historical war and inflation. Post-Vietnam War and reunification, hyperinflation, and a command economy caused the value of the dong to fall drastically. 2. Export strategy. A weaker currency helps Vietnam remain competitive in global exports. Keeping the VND low encourages foreign companies to manufacture in Vietnam, boosting employment and GDP. 3. Capital controls. Vietnam still maintains strict capital controls and monetary policies that inhibit open free floating exchange of the dong on international markets. VND to revalue. 1. Strong economic growth. Vietnam's GDP growth averages around 6-8% annually. With low debt, rising foreign reserves, and strong exports, the fundamentals support a stronger currency too. IMF reforms trade agreements. Vietnam has signed major free trade agreements, FTA including the CPTPP, VFTA, and RCEP, which bring in investment and boost trade, putting upward pressure on the VND. 3. Rising forex reserves. Vietnam's foreign exchange reserves have crossed 100 billion, creating a strong foundation for a potential revaluation. 4. Move toward market economy. As Vietnam moves from a socialist-oriented economy to a more capitalist model, it needs a more realistic and market-reflective exchange rate. Part 2. The global currency reset. What's really happening? What is the GCR and who supports it? The idea behind the global currency reset, GCR, is that many national currencies will be revalued or realigned simultaneously, particularly those tied to real assets like oil, gold, or commodities. Supporters claim this would level global wealth imbalances and reduce the dominance of fiat-based systems like the US dollar. Those who believe in GCR usually reference IMF's SDR's asset-backed currencies. Gold will back the end of the petrodollar system, rise of bureaucratic alternatives to IFT and the USD, while the GCR is often criticized as speculative or conspiratorial. Dollarization trend, rise of CBDCs, and geopolitical shifts toward multipolarities. China, Russia, bureaus indicate that parts of the financial order are indeed changing. To part IV, what an RV might look like, let's explore realistic scenarios of what could happen if both IQD and VND were to revalue. Scenario exchange rate notes, conservative 1 USD upon 1000 IQD 30 cent gain, backed by oil revenue and reforms, moderate 1 USD Paizo upon IQD, major gain, speculative. Needs full impact and aggressive 1 USD upon IQ and realistic unless currency redenomination and global reset occurs. Vietnamese Dong RV scenarios, scenario notes, conservative 1 USD. $20 in model revaluation due to steady stance by VND forex, US Paul, VMD, likely unless by gold or major immediately for VVZ. Risks and considerations. 1. No guarantees. There is no official confirmation from the CBI or Vietnam State Bank that any RV will occur. Most discussion around RV is speculative and fueled by social media and forums. 2. Currency hoarding. Some investors hold millions of IQD or VN hoping to profit massively. However, scale exchanges may be limited, taxed, or restricted if a reset occurs. 3. Inflation and controls. Revaluation could lead to unintended consequences such as inflation, unemployment, or banking restrictions, especially if it's not managed smoothly. 4. Geopolitical tensions. Iraq faces political instability, corruption, and insurgent threats. While Vietnam remains cautiously authoritarian with economic controls, these factors can delay or halt RV plans. Conclusion: is the reset real? While there is no official confirmation of a global currency reset, financial systems are evolving rapidly. Iraq's economic reforms, oil wealth, and monetary tightening, alongside Vietnam's impressive growth and rising status, make them serious contenders for future currency adjustments. However, expecting an overnight millionaire making revaluation remains speculative. The most likely outcome, if any RV occurs, would be a gradual, controlled, and partial revaluation over years, not a one-day reset. Investors and observers should base decisions on verified policy changes, IMF reports, and macroeconomic indicators. Not hype. Stay informed, cautious, and diversified. The global financial order is indeed shifting, but thoughtful preparation beats speculation every time.